metal, gold, continues to remain in focus today. Spot gold is trading softer, down 0.5% at about $3,345 per ounce today, after posting solid gains of nearly 5% last week. The latest pullback comes as Donald Trump softened his tone on trade, pushing back a key tariff deadline with the European Union to the 9th of July, calming market nerves temporarily. But it's important to note gold is still down nearly 5% from its all-time high of $3,500 per ounce. The big question now is, has the correction benefited consumer demand? To decode exactly this and to bring us insights from the ground, we are now joined by Mr. NITIN KEDIA, National Secretary at All India Jewelers and Goldsmith Federation, now joining us. Mr. KEDIA, thank you so much for taking your time out and joining us here on ET Now. Last time when we spoke to you in the first week of April, you did tell us that demand is expected to bounce back if gold prices correct by about 3 to 4% and that indeed has happened now. Gold is down now 4 to 5% from all-time high. Are we seeing any recovery in demand on account of this fall in gold prices?
Good afternoon, ma'am. Though I said that if there's a correction in the prices, we may see the demand upsurge coming in. But unfortunately, what happened that the prices came, but it did not sustain so that the buyers can come to the shops and they can do some bargain hunting or they can buy the jewelry. In fact, what happened that the orders which the jeweler had taken during that time, they could not even hedge that, and the prices have bounced back, up by 5% in last week only. So until now, we have not seen the demand coming up here. But as we know that the marriage season is near and the prices have now become stable, and the consumer is also accepted that the 90,000 is a new normal. So we are expecting that in the second week of June or third week of June, we may see some uptick in the demand coming.
If you can quantify that for us, because last time you did tell us that in the January to March period, demand in terms of volume had fallen by about 8% in the wedding season. How much of an improvement are you expecting in the second week of June, now that perhaps wedding season and demand is behind us now?
See, value and volume terms both are different, because if we compare this particular June last year, second week, to the last quarter, then prices are almost normal around 90,000 or 88,000. So in value terms, we may not see any upgrade coming. But in volume terms, I expect that we will be having a better week than Akshaya Tritiya in second week of June. And probably we'll have some 5% or 6% more sales than on the week of Akshaya Tritiya.
So demand from the second week of June is expected to be better than Akshaya Tritiya. That's the word coming in, and that's as far as demand is concerned. But also wanted a sense of where you're expecting demand to come in from. Will it be from rural areas? And now that we're expecting monsoon to be better than normal, do you expect rural demand to pick up versus urban demand?
Let me tell you that during the month of May and June, the demand which comes in, it's generally from the rural area, and this time also we are expecting that the rural and small towns, they are going to majorly contribute, and probably the 60% of the total sales will be seen from rural areas and small towns only.
Okay, so that's as far as rural demand is concerned. But if you can break up the total demand for us into investment demand and consumption demand, how have trends for both these types of demand been over the last 1 odd month?
See, when I talk about the investment demand, it's a reverse happening. The people, those who have bought earlier, if they are in a need of money, they are coming and selling the gold, and they are encashing their margins. But as far as the fresh investment demand is concerned, we have not seen any uptick that is coming in. In fact, it is down by 10 to 12%. But we expect that if there is any correction before June, and if we see price coming down to 88,000, 88,500, then definitely we are going to see some 50 to 60 tons of investment demand coming into the market. And not only in gold, but definitely this time we'll see that in silver also.
Understood. So that's as far as demand is concerned. But if you can tell us, what is the sense that you're getting from customers on ground? Are they looking to buy more gold? Are they waiting for prices to fall further, or they have accepted that 90,000 is the new normal now for gold prices?
As said earlier, that they have accepted that the 90,000 is a new normal as far as the consumer for jewelry is concerned. But when I talk about the investment demand, then still people are not convinced that this is a good level to go for an investment, and they are still waiting for 88,000 or 87,000 to come in so that they can enter for a fresh investment. And I think that this 3-month pro forma will be seen in the World Gold Survey or the Gold Survey, which is about to come in July.
Okay, so that's as far as demand is concerned. And what is the sense that you're getting from customers in terms of export demand? India is also a major player in the global market. How is export demand shaping up now?
Ma'am, actually, AIJGF, the association which we belongs, we generally cater to the small manufacturers, traders across the India, and we have a very small traction about the exports. But the feedback which we are getting from the small exporters, those who are connected with us, that because of the tariffs, the demand is less, and they still believe that going forward, this tariff talks will take progress, and definitely the demand from export will also come. But this second quarter, this April, May, June, if I talk about, then it's been seen that the demand of export is generally low.
Mr. Kedia, thank you so much for taking your time out and joining us here on ET Now and helping us decode what the implication could be of the fall in gold prices.
If you like this video, then like, share and subscribe to ET Now.